Wow, what a great day so far for this Wavy Tunnel Pro Mastermind. Shamsul is up next. Shamsul's topic is Wavy Tunnel Pro Institutional Price Action. So Shamsul is going to introduce the institutional price action system and share advanced techniques for identifying market movements driven by major financial institutions. And he's developed a tool. And with these tools, you'll be able to predict trends and price action with higher accuracy, giving you an edge in any market condition. And this complements the Wavy Tunnel Pro system beautifully. So over to you, Shamsul. Thank you.
Thank you, Jody, and welcome everybody from down under Australia. It's 6:12 a.m. early in the morning in Canberra, and I just starting my day, and you guys finishing your day, I think, very soon. So welcome. The Wavy Tunnel Pro Institutional Price Action is nothing but the normal price action, what you learn. We just actually try to work out what institution actually does with the price action, how they manipulate the market, and how they get the benefit and advantage of the retail traders. So we try to learn how to detect those institutional movements. And today, especially for today, I have prepared a specific trading technique or strategy which I use every single day, every single week, and every single candle. So you will be amazed like how it's a normal thing, but just from a different point of view, you will see that one. So let's start with the disclaimer as usual. So the presentation is for the educational purpose only. And remember to practice with a demo trading account with any concept or strategy until you really get to know and understand the risk. Our actual price action course, which involves so many topics, I just give you a very, very high level what topics that course actually involve. And this is, we try to learn. Today, we will try to just simply focus on institutional candlesticks and a very, very high level of the market structure. But the thing which I want to show you today is the power of a single candle and how you can actually get the top, catch the top and the bottom of every single candle, because there are clues from the institution in every single candle, and they will help you to catch those tops and the bottom. So as I says here, this institutional price action revolve around detecting the institutional behavior in the market, and they also help you to understand the market cycles as well. There are two market cycles. One is the retail traders market cycle, and this is what we generate, and this is what we try to trade. But there is another market cycle, which is institutions use that one. And the institutional market cycle, this is what we want to know. So we can actually follow their footprint and try to catch the trade, what they are doing. To understand the institutional market cycle, because they will not tell you that's what they're going to do next. But the one thing is very, very important, that they leave their footprint on the charts. And the chart is actually made of the candlestick. So if we understand the formation of the candlestick and try to link them the institutional market behavior, we will easily find market tops and bottom. And I can tell you, everyone in this room, they use this technique day in, day out, but they haven't looked from a specific point of view, which I'm going to show you today. Today I want to show you how I dissect a single candle to find a reversal pattern and to find a trade almost every single day or every single hour. So it doesn't mean that the day starts 3 hours ago and I missed my trade. No, you can find on every single candle, like 1 hour. If I start trading right now, I can see that this hour's candle, I will try to find my top and my bottom, and I can take my trade from that way. So, and this is what I say today. I will show you how you can find one trade every week at least by using weekly candles, and the same with the daily 4 hour or 1 hour. Now, before I start, we need to understand a formation of the candle. We all know that the candle actually have a body, an upper shadow or upper wick, a lower shadow or a lower wick. The candles comes into 3 different formations. They are narrow range candles, and there are some wide range candles. The wide range candles, they are the footprint of the institutions, same as the narrow range candles. But institution actually use the narrow range candle to attract the retail traders or the trap the retail traders. And they use the wide range candles with a specific body formation to move or advance their own move, leaving the retail traders behind. So if we understand these 2 type of the candles, one is a narrow range candle and another is a wide range candle, we will be able to catch some of those institutional footprints or institutional manipulations in the market. Now, in a both kind of candles, you will see they appear in a swing trading. Sorry, this both appears into the swing point. So when you make a swing point, you will see somewhere there are narrow range candle and somewhere they are the wide range candle. If a wide range candle have a body more than 60% of its range, we consider this particular candle as a power candle. And the power candle is actually a footprint of the institutions, which they show their intention, which direction they want to move. If the candle is red, then that's mean, and with this power candle, that's mean institution wants to move the market downside. And if it's a green or red or buying candle, then we know that they want to move to the upside. The narrow range candle pattern often indicates accumulation or distribution or pause in a trend. So that's why it's very, very important to distinguish between the wide range candle and the narrow range candle. Now look at here. So these are the ones, those small candles, they are all wide range candles, right? And with this candle, you can see it doesn't make any sense. All it does is just a whipsaw in the market. The trader who actually try to come into the market, they want to trade on every single candle. They get trapped here if they don't understand this trade for the trend formation. So that's why we have to distinguish between the narrow range candle and the wide range candle. Now, this is the wide range candle. It's showing straight away that institution move these big prices from this part to this part. That's at least about the 10 points or 15 points. We don't know based on the time frame of the candle. But just the one thing to mention here, that's when you move a price by 1 point, you need at least 10,000 contract. And who have that much money for the 10,000 contract to move the price by 1 pip? Institution, we don't have that one. So whenever you see those big movement, it is the institution's intention. They want to move market down, or they have some kind of like, let's say a pending, they have some open positions here and they want to actually protect their position. So they bring the market down. So institutions activity, you can always detect with the wide range candles. This is another one, wide range candles. And this particular move, you can see that they initiate their move downside. Then the market actually move upsides, come back to the same level and come down again. So you can see with those big candles, they want to actually trap retail traders around this area in all those small candles. And then after that's bringing down again, their move to the desired level. If you look on this particular area, for example, from here onward this, many people will say it's a channel. They will try to trade with the trend line. And the minute they will actually take their long position over this trend line, institution, bring them down, take all their pending orders here and grab the liquidity and move in their original direction. If you know this move, you know that this is a trap. Because in narrow range candles, we don't have a wide range candles. And this particular move indicate that institutions want to come down. And if they have start pricing moving downward here, that's probably somewhere they are actually trying to protect their level. So that's why we have to understand this wide range candle. And after the wide range candle, what's happened, like this channel or whatever you can call it, but this is a trap for me. Okay. Now let's go to the next slide. And this is my favorite tool, which I use, try to understand every single candle every single day. The candle range, which is top, which is high, and the low of a candle. And if you divided this particular candle into the 5 zones, and you can say that's the top of the market or top of the candle range, it's a very bearish, and the bottom, sorry, very bullish, and at the bottom is a very bearish. If a price actually starts somewhere around here, if it's moved upside right at the top, and if there is a selling pressure in the market, the seller will actually push the prices down into the bearish zone, and you will see a very, very long, elongated upper wick. That's indicate a selling pressure. And if you look this kind of this tool to everywhere, you can see, you will easily find out what a single candle actually try to represent, whether it's a bearish candle, it's a bullish candle, it's got elongated upper wick or elongated lower wick, whether it's a neutral. And this is I always used to understand the selling and buying pressure from the institution, not from the retail traders, because every single candle is actually made by the institution. We just simply participate slightly on this one, right? So try to understand that one. That's the range of the candles. The closing and opening of the candle is very, very important. Where it's actually closing, that will give you a clue whether the institutions are active or they just try to trap the people. Now, another point I want to mention, that's a swing point and the liquidity. We all know that's the Bill Williams fractal, where we got a 5 candles, 2 to the left of the middle candle and 2 to the right of the middle candle. And that's a very, very famous fractal point, or the swing high or swing low. What we use in the institutions swing points or institutional trading, we only take the 3 candles, right? So this is a candle number 1, candle number 2, and this is the candle number 3, right? Before I can go into this swing point, I just want to tell you that every single candle, when you use, you will find a swing point up and a swing point down. So this is where we can try to catch this particular pattern on a single candle. So that here you got before this swing point. So this is our candle number 1. The high of this swing, this candle in the lower time frame, you will find another swing points. And when this second candle actually take the liquidity of these swing points, or previous candles high, that's mean this candle actually have taken the liquidity out of this entire swing point in the lower time frame. And this is very, very significant, because a swing point on the lower time frame on top of this candle, if that liquidity has been taken by the second candle, that's mean that market is actually trying to go downside. And this middle candle have its own the swing point. And then the third candle, which make the higher low. So this is high, higher, high, and higher low. That's actually failed to take the liquidity of this swing point. But it's actually take the liquidity of the second candle's lowest point, and that's indicate market is now want to go to the bearish. If you try to identify this pattern in a higher time frame, on the 4th candle, you have a trade in the direction of the market. Okay, and this is not a rocket science. It's very, very simple. You just need to understand how those swing points actually form, and how this middle candle take the liquidity of the previous candle, or every single candle, how it takes the liquidity of the previous candle's highs or low. And that's what I'm actually trying to say here. And when you see this pattern, when I'm going into the next slide, that slide will show you how I use this one every single day to find my my trade and every single week. So, for example, if I can go in this market here, this is a Euro USD, and that's a weekly time frame. And what I'm actually want to show you, so this is your single candle on the weekly. You can find your trade right at the top or right at the bottom. Okay, and it's not that hard because, as I say in my presentation, that this swing point right up here, it's this the high of this candle, it's got a swing point, 3-candle swing pattern. And if you understand that 3-point swing pattern and you know how to trade that one, you should be able to catch your trade from the top or from the bottom. Okay, so let's go back to the presentation. Now, this is what I was actually just shown in you the trading view. So this is your weekly time frame. The swing high and the swing low of the weekly candle. When you go to the daily or 4-hour time frame, you will find a swing high pattern right up here and a swing low pattern right up here. And if you go further down into the H1 or M15 time frame, each of those points, like this candle swing point, represented by this swing point in the lower time frame, these candles swing point represented by this swing point in the lower time frame, and this candle's high is represented by this swing point on the lower time frame. So just imagine that's the weekly candle when you start your trading, and if you can find this swing high or high of the week or low of the week just using this pattern on the lower time frame, you don't have to guess like whether market will actually break your pattern and go up or down. Just try to find this pattern on your chart on the lower time frame of the weekly candle and then trade to the other side of the market. You will find your trade every single week. Now, as you can see here, that's I put a snippet here of my scanner which I use, and that scanner tell me exactly how many bars ago, in which time frame, these particular pattern has been formed. So this is a 3S in 3 swing pattern. So swing pattern 1, 2, and 3. And these 3 actually make a single swing point, and this single swing point actually make the high of this candle. Okay. That's and this is I'm just going to demonstrate you in a second how I took the trade of this week, which start from Monday. I took a trade of the Euro USD, the short trade, just exactly using this pattern. Okay, so that you can see, I'm just showing you now at the top side and the bottom side, the swing high and swing low. And this candle, what you can see here, it's a weekly candle, right? That's the weekly candle of the last week. Okay, and this is the top of the market. This is the bottom of the market. And that's I'm presenting right up here in the weekly. And this candle is my 4-hour candle. Okay, in this 4-hour candle, you can see the high of the week is here and the low of the week is here. Did you see high of the week is swing pattern here? High, high, higher high, lower high. That's your swing point, swing high on the 4-hour time frame. And that's right up here. You got your low, lower low, and higher low, your swing point on the 4-hour time frame. And this is entire range for that week. When we go to the M15 time frame, I'm trying to focus this area here because the market has gone down. So I'm trying to focus this area here on the lower time frame. So these 3 candle, 1, 2, 3, these 3 candle is my clue to find a short trade on the lower time frame of the 4th candle in this area, which is this one. When it's break this area, then this is my trade entry. And you look at here on the lower time frame, which is M15. This is exactly what's happened here. So you got a high, you got a low, and you got another low, and right up here, you find a trade setup. Now, somebody would say that's this when you try to catch this particular trade, and I catch this entire trade, which is I think the last week. This week I also took the same trade. I will show you in a sec on the chart. But did you notice here that's the high, higher high, and the lower high? This point is exactly the same point as what you can see on this H4 time frame. And this is H4 time frame, exactly the same thing as what you see in the weekly high point. So you can catch a high of the week or a low of the week quite easily just by using this pattern. And this pattern is nothing much. I mean, it's not a rocket science. It's very simple. What did you see here is an head and shoulder pattern, right? You got, and if you're looking for from the wavy tunnel or the Elliott wave point of view, this is your wave 3, your wave 5, your wave 2, sorry, wave B. So 3, 5, B. It's the same thing, exactly the same thing. We just simply try to find top of the week and the bottom of the week using the same pattern and giving a little bit different angle to find those ones. We use the semaphore. I use the semaphore very extensively. You can see on my chart, I don't use any other indicator but the semaphore and the bungee, nothing else. And that's how I found a trade almost every single day, every single week, or every single hour. So let's go to this week's trade setup. That's week starting from Monday 18th, high of the week, low of the week so far. How do we find the trade? We go to the 4-hour. Okay. 4-hour time frame. Your market is actually Sunday. That's a start here. What did you got here? The first thing what you got here with the market start, you got this swing low, and then you got this swing high, right? Now, if this swing low is not very clear to you, just try to see low, lower low, and higher low, okay? When you get this particular candles, this particular formation, do you want to go long here, or you want to wait market to make a high and then come down? That's decision you're going to make based on your weekly or the daily time frame. So for example, what I can see here on this weekly time frame, every single candle is actually closing below the previous candle's low. That's mean market is in the bearish market. Until it's actually break the high of this one, I am bearish in this market. So I will not trade any long trade from here. I will only focus on my short trade. So on the 4-hour time frame, when I went here again, and I see that's this particular pattern, I ignored this one. When the market move upside, high, higher high, lower high, that's my area to focus on this now. And I can mark this right up here. And then I will go to the 15 minutes. Low, high, and low. That's where I actually got the trades. Very, very simple on the 15 minutes time frame. Okay, so this is your also the Royal Semaphore. We know that Royal Semaphore most of the time is actually formed at the wave 3 or wave 5. So if this is my Royal Semaphore, this is my swing high, the previous one, and this is the new one, and here I can take my trade onwards. And my target will be probably low of the day, because I'm not sure that the market is going to go lower or not. So I will just simply target my low of the day if it has been formed, which was this area here. When if you look at the 4-hour time frame, I'm talking about this, my target here. That's the one. Because I see that this is the where it's actually has formed a swing low. So when I enter from here, that's how many points you got in 1 week. So that's your, from here to onwards here is about 60 points in 1 week. After that, I haven't done anything. I can wait for the market to go up again. If it is going up again, that's fine. I already took my profit. But if I can see some resistance in this area, once again, I can take another trade from here. There is another swing point, high, higher high, and lower high. So now I move my point back here. And this one, go back to the 15 minutes. What we got, another trade setup. High, low, low, and there. So we will find every single day those trade setups, no matter what. And this is how I actually use. I lost my semaphore. Hang on. Yes, somehow I closed this one. So, but that's fine. I will show you this one. So you can see how I actually use a single candle, a weekly candle, to find my trade. And on this one, how many points we have made so far? So I exit out here. So 60 points again. So in 1 week, you got 120 points. And this is the current week. There is nothing different on this. It's just the current week. So all you need to do, you need to actually try to understand this particular pattern. And you will find a trade setup on every single day of the week. Sorry, every single week, every single day, and every single hour. So if you want to go for the weekly, daily time frame, or same exercise, nothing different. Okay, let me put my indicator back. Okay, so I just turned the volume off. Now go to the daily time frame, and that's your daily time frame. This is today's candle. I'm not going into the history. I'm just taking the current price action, showing you how we take the trade. I haven't took any trade today because I'm already long. I already took my trade in Euro USD for this week. So I didn't took this trade, but I just want to show you how you can take a trade. If you don't want to work on the weekly candle, you can also work in the daily candles as well. So from daily time frame, go to the 1 hour time frame. And here you got a swing point right at the top of the market, and you got a swing point right at the bottom. Right now, market may go further down. We don't know because market hasn't closed yet. But did you see here that swing point? Mark this swing point. Okay. Go to the 5 minutes time frame. What do you see here? Low, sorry, swing, left swing point, middle, and the right swing point, and you got your trade here. You will see every single candle. Even if you want to do a 1 hour, you go to the 1 hour, 5 minutes, and 1 minute, and you will see the same pattern again and again and again. So this trade, if somebody would have taken, I didn't took this one, but that trade would have given them something around 53 points or whatever. I think it's gone down. I normally go from the, if I see a royal semaphore, then I try to go up to the royal semaphore. Now this royal semaphore is right up here, but I believe that it may have repainted, and that semaphore would have been here previously. So this is my bread and butter. Every single day I use this one, every single week, every single hour. Now, the power candles, I just mentioned to you guys, the power candle is one of the most visible footprint of the institutional activity. So what is the power candle? Power candle is, as I mentioned, this is a 60% body of the range of the candle. And if you see this one in the swing point, so let me go back to my swing point chart. Okay, so right up here, so you got this swing point, right? And in this swing point, if you have this left candle, a power candle, and a middle candle, a narrow range candle, that indicates that institution actually accumulate, manipulate, and then they actually come down to their original position. I just want to explain you this power candle concept a little bit in detail. So Akur are doing the trading view. That's easy to move. Let's say we got this one candle. We got this another candle here, the second candle, and we got this third candle. Now, every single candle, they have a wick. That's one wick of this. And this is another wick. And this is the third wick. Now, just one thing I want to mention here. If the second candle take the liquidity or the high of the first candle by the wick, that indicates that institution wants to bring the prices down. Buying pressure, whatever has come from this candle, is actually evaporating with this high wick and closing below this high or this below this high of the previous week. That's showing a selling pressure. Institutions want to bring the prices down. If for whatever reason, if this candle close above here, that's a weak sign, because we can see that's the buying pressure is still present in this candle. So ideally, I want to see the swing point with the candle closing below the high of the previous candle. And the third candle needs to break the low of the second candle by the body. So right here, at the moment, it's only wick. And the wicks indicates, again, that we still got a buying pressure. If the institutions really want to protect their area, then they will basically bring down the prices below here and close below this swing point, right? So this is my ideal situation for a swing point. Whenever I see like this, where the body is closing above the previous candle's high, I always cautious using that particular pattern, and I wait for the another opportunity. Okay. And if I can show something in my presentation, I think I have it here. Right up here, did you see here SPT MSS? That SPT indicator or the scanner actually present exactly the same pattern, which I have shown you here, where actually body close below the previous pattern, previous swing point. So whenever you go into this presentation, whenever you go into this scanner, and if you find, and if you look at this column, SPT MSS, the number of the bars here, they actually tell you how many bars ago this pattern has been formed. And you can use this one to identify this powerful pattern and try to take your trade. Okay, so that's what I wanted to show you, the power, why I use the power candles on this pattern. Okay, now on this chart here, you can see this is your power candles. This is your narrow range candles. So these are your power candles. This is not your power candles, right? So here you can see the power candle indicates market's upside, the move at the upside. Power candle, power candle, power candle, power candle. But you see, this is also power candle. This is also power candle. But if you look at the previous few candles, they are the narrow range candles. So we're looking power candle into the wide range candles as a wide range candle. So in compare with this one, these are the narrow range candles. Power candle, power candle, power candle. This is a narrow range, narrow range, narrow range, power, narrow, 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 power, power. So you always look a candle in reference to the previous few candles, so you understand it is a power candle or it's a narrow range candle, because narrow range candle will also have a 60% of the body of the range, but it's a narrow range because it's not wide enough. Okay. Now, the next thing which I want to talk to you is the market structure. How do we know that the trend is going up? and that's the trend will continue going up. We all know very, very basic of the market structure that says market actually goes up, high, make the low, higher, higher low, higher high, and higher low. We all know about this one. This is the market structure, which is showing that's market want to move upside. But what's happening in this swing high and this swing low, which can tell us that's the market want to move up and how to find this trend. Most of the time, people, when we see this, the break of the structure here, we try to get a trade at this point to move upside. I normally don't take these trades right here. I try to catch in this leg or right at the bottom, and I try to exit somewhere around here. So that's the point where I actually exit my market, and this is where I enter the trade. And you can see I have exactly marked here, that's every swing point or swing high and the swing low, they have again a swing point. It's the same swing point what you have learned previously. So that swing point will again in the lower time frame will have another swing point, swing high, and swing one, and then on the lower time frame, that area you can find your trade. Same thing, you can do it here. If you can see this, the middle candle is taking the liquidity of the previous candle by wick. I am confident the market will go up. The minute the candle close above here, I am long. So I use market structure especially to try to find out a trade, a market trend, and try to find my retracement point. Whenever this trend actually break here, my this low is confirmed, right? So somebody can say that's, oh, this is too late now for the trade, but try to understand I'm waiting for this break of the structure, then I'm taking trade on this one. So if I have something like this, after this one, when market move up and try to come down, then I'm taking this trade because I have already seen a pattern which is going upside. So my next trade will be in this area, and my target will be here. So you can try to catch a trade at every swing low, every swing high, using the swing point and the break of the structure. Break of the structure will exactly tell you that's how market is actually moving and which trend should you take this one. Another thing which I use in this market structure, measure the distance between this swing and this swing and this swing. If you see that the distance between swing highs, they are actually narrowing, this is indicate the market is going toward exhaustion, and anytime you can expect a reversal. So always measure the distance between the swing highs and see what's happening in this area. Are they increasing or they're decreasing? Right? The same thing you can do with the candles as well. So every single candle, they have a high and lows. So you got a high and you lows. So you try to measure the distance between this low and this low, or this high and this high. You can understand that if the momentum is accelerating or the momentum is slowing down and the trend is coming to the end. So this particular pattern, the swing high, this one, it's always present in every single candle. So sometime if you know how to measure this area, and you can easily find the reversal points. Okay, now this is something which I do. This is for my own use, but I put it here. That's because I use mostly on the MT4 platform. So I want to show you the time when on MT4 platform, the charts actually starts, and they basically starts around this area, Cyprus time. So when you have a 7 a.m. in Sydney, in Nicosia, it's a 2 p.m. in Sydney, and the day change in the New York. So this is when the rollover starts in 2 o'clock. And this is almost the time when we can see in Sydney, that's the part of the Asian session is about to end or start. And you can see in the Sydney, for example, 8 a.m. or 8 a.m. This is when the Sydney's market starts, and this is where we got the Asian session starts from the 10 a.m. up to 5 p.m. or something. So this is a time frame I just took for my own benefit, because I normally, my timing of the trading is as per Australian time, is from 6 p.m. up to the 10 or 11 p.m. And I try to catch this area where the London session is active and the New York is about to open, because these days with the daylight saving is starting in Australia and daylight saving ends in New York. So 11 p.m. means it's about 8 a.m. in New York. So this time is the daylight saving, and here is no daylight saving. So just add 2 more hours here. So it's about, when we see 9, it's actually 7. Okay. Okay, one trade every day. So I just mentioned you something about a single candle and how you can find at the top of the 3 swing patterns and the 3 swing patterns on the bottom. And these are the area, they are actually, I consider manipulation by the institution, because institution always try to pick this one. They always generate this big wide body. So if they are doing this one, then and if they want to start of the day as a bullish, then they will generate a manipulation at the bottom of the market, like as you can see here in this area. And this is where you will see the 3 swing points, and then market will push up and your target should be up. So they always try to generate an accumulation or a manipulation around the start or the below the start of the day. And this is your New York midnight open right up here. You can see it's this is the candle where it started, and after that they manipulate downside and then they move upside. So I use this one trade every day using this exactly the same methodology: manipulation, expansion, manipulation again. And at this top of the candle right up here, I try to find a 3 swing point patterns, and at the bottom 3 swing lows pattern as well. Now I want to show you the tool which I use all the time. And this tool will tell me the important point which I just mentioned to you, which is the 3S swing point. So this is the 3S blue, 3S red, yellow, and the noble. What does it mean? That's the 3S blue means that you have a blue swing point, a royal, and a blue. So you see blue, royal, blue, then this blue to the right side. After the royal, market failed to go upside, you can take your trade. The same thing with the red, and same thing with the yellow and noble. When you see the royal, noble, this is the trade, what you can see, a kind of the royal crossover trade. Because with the royal crossover, when you see a royal semaphore, we want to see those noble pattern left and the right of the royal, and to go to the other side of the market. So you can see this is my scanner, day-to-day scanner. I don't work without the scanner because I don't have time to go through every single chart and try to find out whether the trade is ready or not. Remember, that's the 3 swing pattern will form every single day on every single candle, every single pair. But you need to pick the best one. So this one helped me to find out, identify the best pattern for that area, especially with this 4.3S blue, red, yellow, and noble. So this is where I actually find my trade. The second thing I have it here is a break of the structure. The break of the structure will tell me if the trend is up or the trend is the down. So this trend is telling me that's for 5 minutes time frame, the trend is up, because it says 57 bars ago, I have a last break of the structure on AUD Canada 15 minutes. In the 15 minutes time frame, I have 37 bars ago, a bearish break of the structure. And with the combining these two, M15 and M5, I can see the actual trend is a downside, and this is just a correction. Because hourly time frame, Australia, Canada is also down, 15 minutes is down, M5 is up, so that's a correction. It's a very, very simple logic. I don't have to go to the chart to find out this one. I can sort all my candles by symbols and try to look for the break of the structure and find out whether the market is going into a correction or market is going into a trend direction. So that's one of the very, very excellent point which I use all the time, this tool. The second tool I use is change of the character. Change of the character is a term introduced by Richard Wyckoff here is the accumulation, distribution, and markup schematic. You can go and Google that particular pattern, and the pattern is nothing but a market is coming down and suddenly stop going further down, and then it goes into the sideway. So you have a pattern. The market is coming down, and here you form a candle, a big candle, whatever you call it. And after that, what's happened, because the market stops going further down here, that means that the institution either absorbing all those selling, or there are no more seller left. And the impact of that one, there is an automatic rally. Then the price actually come down, try to retest here. And that's area, this 3 point, low, high, and lower high. That's, you can call it 1, 2, 3 reversal as well. But this area called change of the character, where we see market change its character from coming down to a new phase, which is a sideway market. And then here you have another change of the character when the market want to move upside. So this is a little bit detail we study in our course in detail, but I'm just giving you very, very high level one. So this chalk is actually show you what's happening into the market. How many bars ago market actually have changed its direction. So you can see this is a correction is showing on M5, correction, and this is exactly what's happened. That's on the 4-hour time frame, just 7 candles ago, you have a change of the character to the downside. So all those showing that this is again a lower time frame uptrend, which is a correction of the higher time frames downtrend. Then we have a fair value gap. Fair value gap is a very simple 3-candle approach. I think many people knows about this one. So you got a candle number 1, you got a candle number 2, and you got a candle number 3. And often you have a wick somewhere around here. You have a wick here, and here, and here. And whatever the distance you have between this high and this low and this high, whatever the distance, it's actually called fair value gap. So that's actually tell you where the last fair value gap has happened, at what price, and how many bars is actually how many points to go to this fair value gap. So for example, in this case, I can see that Australian Canadian dollar, it is a correction to the downward market, and I can see there's 36 points. Market is 36 points away from this fair value gap. That's mean when the market, I can set my alert, and the market will alert me when the price is reaching this fair value gap. Okay, when the market reaching this fair value gap, I need to revisit the area and see if I can see a swing pattern here, which indicates me that the market want to go down. If I don't see any swing pattern here, that means market is going up. So there is no trade for me upside, but there is a trade for me downside because the trend is down. So that's how I use this scanner to understand this price action and different kind of those market reference point to find out where I need to get this trade. This one something is a little bit different. At the moment, we are doing some experimentals here, and as I mentioned you, that's one thing which is not shown on this scanner is right up here, which I have shown. Hang on just a minute. I think this one. Okay, so you can see on this scanner, this is the latest scanner I have, and this particular one is SPT MSS. Actually, I can show you on this chart here. Okay, so you can see this is SPT, and the SPT will actually tell you the specific high probability swing pattern, which I show you how it used. Institutional swing high, institutional swing lows. These are the 2 new swing points we have introduced in our indicator or the scanner, and all those sort of things. When you click in one of these symbol, it will open that particular chart of that particular time frame, and that's it. And you can see our indicator, which come with this scanner. They already plot everything for you on the same time frame. Now I know that's I had only 1 hour, and I gone too much detail on this one. So let me see how many left, so I can complete my presentation and hand over to Jody.
You can
That's
go
the
another few, you can go another 5 or 10 if you need to.
Okay, no problem. Thank you. And you can see that's the associated indicator STS right up here. You got a volume indicator as well if you want. That's actually come with your Wavy Tunnel Pro indicator set list, and that's help you understand what exactly happening with the wide range candle. If the wide range candle, they have a very high volume, you know that institutions try to manipulate right up here. And right now, I give you an example. For example, the Bitcoin, everybody in the street is talking about the Bitcoin. Why they're talking about the Bitcoin? Because Bitcoin actually reached a certain level, 90,000, 78,000 or whatever. But again, does it mean that we buy from here? No, we don't. Just think about, if you buy Bitcoin right now at this high level, who is selling to you? The people who actually spread the rumors that's the Bitcoin going to go to the 1 million or the 200,000 or 100,000. Those people who spread the rumor, they want to sell their Bitcoin. So they're spreading the rumors with the good news. So you and I can buy that one and they can get rid of their Bitcoin. So always think about when you buy, who is selling you, and when you sell, who is buying from you. So I just want to explain you a little bit more on this scanner. This particular scanner, it's got exactly the same alert level and everything what you see in the Wavy Tunnel Pro system. These are the just different strategies and the different ways I use with the price action, and that's why I create this scanner. If you go to the properties of this scanner, and you can see exactly the same way as we got the Wavy Tunnel Pro, and you got different kind of the strategies which you want to show, which you don't want to show. You can turn off and turn on those strategies here. And here are the different settings for each of those strategies. Then here you got all those alerts. So one thing which we have introduced in this scanner, you can set your custom alert text. So here you got the enable breakout, a break of the structure alert. You can put your own text here for the bullish break of the structure and the bearish break of the structure. So you know what you want to see on your chart or your mobile phone. The one thing I actually do for this scanner, because you can see there are so many strategies here. I don't want an alert for every single one. Otherwise, I will get lost. So a specific strategy which I trade, I said I want to trade 3S red. I will enable the alert only for this one. And whenever there is a trade on this 3S blue, 3S red, or whatever I want, I simply turn off all those alerts and only turn the alert for that one. Once I got this alert set, I put my message there, and then I can go here. That's a push notification that will comes to my mobile. If sometimes this mobile doesn't work, then you can also get an email alert. You can also get the pop-up on the screen as well. So this is what we got for these scanners, and you can set multiple time frame as you like. I normally don't go less than 15 minutes. So daily 4 hour, 1 hour, 15 minutes is sufficient for me, but everybody have their own preferences. The one more thing that's you can see here is suffix. So many brokers now these days, they introduce .1 or .a or y or whatever after the symbol because of the regulation of the different part of the world, especially in Australia. If you sign up with a broker will won't give you 1 to 100 leverage. They will only give you 1 to 30 leverage, and they give you a different suffix like .a. So you don't have to type the .a at the end of each of those symbols. You just simply type here, and it will automatically put .a and take those data from here. Okay, so that's what I have for you guys. And we also have the dedicated premium channel. When you subscribe, you will get dedicated premium Discord channel. I will try to share my weekly analysis on this one. I mean, in last few weeks was very busy. I haven't done it, but my aim is to share my weekly analysis on the stocks, indices, and Forex pair in the dedicated channel. And the reason for this one is because this is also forced me to find and take those trades which I'm showing in this weekly analysis. Because when you do the weekly analysis, you go with your own methodology and you find the trades So you post it there, you set the alert and take the trade yourself. So that's the one of the reason I always say that I will try to share my weekly analysis, and I want to do that one for stocks, indices, and forex. One more thing, I just very briefly I want to mention. Go to the slide. Swing points here, right? Let's say if you are doing a trading on the options, okay? So when you got your weekly candles, right at the top of these weekly candles, because you know now you understand it on the lower time frame when you see these swing points, right up here you can have your call credit spread, and here you can have your, you can sell the put options, or you can actually have your credit spread selling here as well. So that's how you can also do your the options trading, just simply based on this one on the weekly time frame. And if you're doing the day trading, then just consider this is a daily, this is a 1 hour, and this is a M5, and then do the same thing again, selling options here, selling options here, and you know this pattern after you sell here, the market gonna come down. So that's your premium you can collect, or you can go the other way around. That's very, if you do this methodologically and you use this pattern, you will find almost a trade every single day. Jody, over to you.
Okay, leave your screen on for a sec. Thank you so much, Shamsul. Shamsul, by the way, is a master trader. And I say that nonchalantly, but he truly is. And he created the Wavy Tunnel Pro Institutional Price Action course and tools, which at the end of my presentation, I'm going to show you that we have bundled it with the Wavy Tunnel Pro Accelerated Training, a phenomenal, I've never done that before. And you do get the tool with this course as well. Now, there are some of you who are former Wavy Tunnel Pro students who won't take the full training, but you might be interested in just taking the institutional price action course with tool, and you would just you will email me about that, okay? And then we can deal with it privately. So just email me on that, because I see that some of our students are here, and if you haven't taken this course, you've got to take it. It's just this is just like a small taste of what the course entails. And meeting with Shamsul once a week to do market review, or having him post in the Discord channel, which is what his plan is, that that could be phenomenal. So I think the combination of working with Neil and Shamsul and me, I think it's a phenomenal combination. So with that, I'm going to thank Shamsul, and I'm going to stop the recording and take over the screen sharing. Thank you, Shamsul.